Especially, recently there's been some discourse on crypto Twitter kind of pushing back on VCs, whether that's, due to the kind of high FDV meta, or it's just due to the fact that it feels like access has been less democratic. Is this pushback justified? What does a VC is VC necessary in the space to kind of amplify the industry, right? And say, and kind of fund that early stage layer of projects, or, what would you say to those people who are kind of critical of VCs at the moment in crypto specifically?
The criticisms are absolutely valid. They're, I think, a little bit misplaced, but they're valid. They're valid, like mathematically, launching a token with a 3% float or 6% float or whatever is bad. No questions asked. Now, I say the criticism is a little misplaced because a lot of it is implying the VCs are like, the puppet masters in the background who are like orchestrating the game. And that is not the case at all. The primary reason the low float system exists is because of the Securities and Exchange Commission in the United States. I believe it's Rule 144, if I'm not mistaken. I don't appreciate all of exactly what it says. Our legal team can tell you more, but the basics of it are, you got this 12-month thing where if you're an investor and you buy this asset, you can't resell it for 12 months or whatever. So that is the foundation of a lot of the reason you have low float, high FTV. I actually tend to push our portfolio companies towards no vesting and just do a cliff at 12 months. Because that like is like the legal foundation. I'd say, Multicoin has done, call it somewhere between 200 and 300 deals since inception. I think there's one founder or one company that we've invested in that did that. And not because I pushed them to, but because they intuited all of this on their own, which was Solana. Solana very famously had the vesting chart. Obviously, every team has the graph that shows the stacked line charts with tokens, over time, team, investors, right, community, etc. And Solana very famously had a vertical line on January 7th of 2021. And it was so incredibly fudded. And everyone's like, oh, Multicoin and the VCs are evil. They're going to dump on retail. And that was one of the best decisions Anatoly and Raj made was to do that. And I remind our portfolio founders about this all the time, and they generally don't listen to me. I'm not going to beat the dead horse and try and like exert excess pressure around it. But I at least inform them of this fact. I remind them of what Solana did. I explain my general logic and reasoning, and then they do whatever they do. It is what it is. So coming back to your question of like, is the criticism valid? It's definitely valid. It's frustrating. It's annoying. And like, look, I want to go buy a bunch of like high quality liquid names, but then I look at them and they have a 4% float, and I'm like, I don't want to buy an asset has a 4% float. I want to buy an asset with a 40% float or a 100% float. So it's very frustrating for sure. I don't really have a solution because unfortunately we're bounded here primarily by regulation. If Kyle was dictator of all of the world's laws and regulations, I can tell you what I would do, which is I would say absolutely no restrictions, 100%. Everyone please launch with 100% float on day one. I realize that will come with a lot of its own negative repercussions. There will be people who will abuse the system, eyes wide open. But for the good actors in the system who are building generational wealth and pushing society forward, it will net enable that capital formation to accelerate. So, there's like a fundamental tension here between putting rules in place to prevent bad actors from abusing people versus facilitating good actors to maximize rate of capital formation. And unfortunately, there is a very direct trade-off there.
Right.
No, go
Interesting that you refer to Solana here because I know Solana actually had a token sale on CoinList, and I forget what it was at, but it
22 cents.
Insane returns for investors. What do you think about kind of other alternative distribution methods, whether that's ICOs, LBPs, airdrops?
I'm very supportive of teams selling tokens in whatever legal mechanisms they can to the public at large. I don't like airdrops on a relative basis. Airdrops are warranted for certain things. Obviously, if it's deep in, if it's like you bought a hotspot and like you live in New York City and you're producing useful, radio waves, like you obviously should be compensated for that. Or you mapped, these roads in whatever, Atlanta or in, Austin, on a Hive mapper. So that's extremely warranted. If you are the first person to put money into a new DeFi protocol, that is also warranted that you should receive tokens for doing so. Because, look, obviously there's a borrow lend rate. It's a market. The price, rates will go up and down based on supply and demand. But there is an additional form of risk that is specifically idiosyncratic to new DeFi protocols, which is smart contract risk. And there is no way to make that risk go away. And in fact, the only way to fundamentally mitigate that risk is to have more dollars in the protocol for a longer period of time. We have an explicit methodology for underwriting risk in DeFi protocols internally, which is that. We look at the integral of TVL. And so, the early users of a DeFi protocol, I believe, have a justified reason, to receive compensation because they are the ones who took on that smart contract risk. But like beyond that, airdrops start to become fairly frivolous. And I'm generally in favor of selling tokens to people, whether it's via CoinList, whether it's via LBP, whether it's via some other mechanism. People value things when they buy them. If you get free money that falls out of the sky, obviously you're not going to value it as much.